All right, all right. Hope you are doing well. I know everybody's getting ready for Christmas. Wanted to just shoot a quick update. I know we've been sharing a good bit about what's going on with the economy, what's been going on with interest rates, what's been going on with the inflation. We continue to keep track of that in the macroeconomics, but also wanted to update you just, on the regular as well with some of the things going on, with what we're working on in addition to that. But how that influences our decision making, as we shared in this past year, we saw some of the distress, like we talked about, that's going on in the multifamily space. Also saw that entering into the single family home arena. And so this past year, we resumed with our single family residential division with team members there, led with my daughter and also one of our other team members that had experience with us in the single family space as well, beginning to connect together with sellers directly. And of course, what we saw in the most recent, probably, last quarter, is that the Tampa MSA, which encompasses Pinellas County, was also the leader in the country for the number of foreclosures per capita or per housing units. And so again, that's with what we saw in that distressed element. And we're beginning to see the fruit of that over this last quarter as well. Like, bought a hurricane lot, I think, for 185, sold for 250. Another property bought for 100, sold for 170. Another property that we bought that is probably, I think we bought for 250. That's 380 that'll be going out to market. And then another one bought for 130 that is then going to close just under 200. So all of these transactions are being bought for, call it 55, 60, 65% of value. Some even a little bit more than that with some of the stuff that we're working on right now or the team's working on. So again, it's been fruitful for us, for the secured lending fund as well. And then also, it also validates what I would say in us looking at what's taking place in the distress of the market. And that's going to continue to come as interest rates are still staying elevated. It still puts pressure on things. There's still a real, need for transactions and, people that have to sell. And so we're going to continue to see that taking place. I would say that also it's a foretelling of what we've been talking about also too on the multifamily side. I was just on a call and looking at some stuff, and as an example of that, like in Cleveland, call it 30 to 45% of the B minus and below class properties in the downtown area are on potential for watch list, meaning they're under distress. There's other areas in Alabama, in Georgia, even here in Florida, for sure in Texas. I just talked with a guy last week with, 10 properties and, 6 of which are distressed and, there's no equity in those properties. So these are all properties, projects, and things that are going to be coming into the market. And so just like we're seeing success and fruitfulness in the single family, and the single family moves much quicker than the multifamily just because it's, a $250,000, $350,000, $500,000 house versus a $5 million, $8 million, $15 million, apartment complex. But those are coming and we're going to see that. So we've seen great success with the single family division. That will continue on. We're going to continue to operate in that and maintain that as a continued division of the company, just because it helps people that are in need. It creates opportunity for our investors and for us, and it's creates a win-win where it becomes beneficial. So just wanted to share those things with you, give you an update. Again, we'll talk more about what's happening on the macroeconomic and the multifamily side. The exciting things are coming in the year ahead in 2026. I hope that you and your family just have a wonderful Christmas season and holiday season, and we just wish you the very best. Have a blessed and victorious week, for this is the week God has ordained for you.